Let me also now bring on board Nilesh Shah. It presents Axis Direct. Nilesh, good morning. Always a pleasure to have you back on ET Now. Nilesh, what do you want to start with? Infosys numbers, why US bond yields are down, or you want to start with what the Reserve Bank of India could do on 31st of July?
I think let me be the different voice on Infosys. And let me just talk from the rupee investor point of view. For a second, let's not talk about what's happening in dollar market. Here is a company whose track record is fantastic, and it delivered this quarter about 33% year-on-year growth in profit in rupee terms and about 28% growth in turnover in rupee terms. Against the expectation of about 9,100 crore quarterly turnover in rupee terms, it has delivered mind-blowing 9,616 crore. However, the stock is down 10% because it has missed its US dollar guidance. Now, certainly I can understand the reaction of a dollar investor because there is a drop in the turnover against expectation, there is drop in guidance against expectation. But what I can understand is why is rupee investor behaving as if the ship has sunk? Clearly, if you see, this is probably one of the few period where Infosys kind of blue chip stock is available at a discount to broad market valuation. Based on their own quarterly number and annual guidance, they should be looking at about 165 rupee of earning for FY13. That's just 9 months from now. If we see that track record of under promise and over delivery, the street could be expecting a EPS of about 175 to 190 rupees. Even if we look at 175, which might be the lower end of the estimate, this stock is available at lower than the broad market valuation. And this is one of the few periods where such kind of underperformance has occurred. I think I'll recommend investors to remember that period where Infosys had its missed guidance after many, many years, and the stock corrected quite significantly. If I remember correctly, it was available then at about 12 times 1 year forward earning, and from there it almost doubled in no time. Today also Infosys is available at about 12.5, 13 times rupee valuation. Certainly there are concerns about dollar guidance, there are concerns about margin, there are concerns about earnings. But this is all from a dollar point of view, not from a rupee point of view. Probably this is the time to play contra. It's not that Infosys stock will run away tomorrow, but this is the time to play contra and look at from the prism of rupee investor rather than dollar investor on Infosys.
But Nilesh, when it comes to the entire IT sector basket, do you think the stance is going to be still towards TCS, and TCS will continue to outperform versus an Infy?
See, in a market where investors are finding very, very limited choices in terms of blue chip stocks to own, I mean, why restrict TCS or Infosys? Why not both? The equity ownership of Indians in Indian equities is at all-time low level. So here, why are we debating about whether one should buy TCS or Infosys? I think there is room for both the stocks in the portfolio of individual investors.
So, Nilesh, can I read in between lines? And are you actually communicating to your clients that go grab Infosys with both your hands at these levels?
No, I'm not saying grab it with both the hands. Grab it cautiously, because what's happening on the dollar side can't be ignored completely. But all I'm saying is that let there be sanity prevailing. Today the stock market is reacting as if Infosys is going to come to an end tomorrow. But that's unlikely to be the case. I mean, 33% growth in profit, 28% growth in revenue. For this kind of number, any company in the world will cut its arm. We are cutting the prices of Infosys. So it is time to play contra. Don't just get washed away by what's happening in the near term. Don't grab it with both the hands, but do grab it slowly and steadily. It's time to be playing contra on Infosys rather than just running with the tide.
Nilesh, you know, I'm absolutely with you when you say that Infosys rupee growth is actually enviable. But the bottom line, Nilesh, here is that Infosys suddenly is growing at a run rate which is 50-60% lower than the industry average. So NASSCOM had projected a growth of 10 to 12% for FY13. Now Infosys has indicated they will only grow at 5%. So I think somewhere that is disturbing investors.
Undoubtedly, I'm not saying that the drop in Infosys prices is unjustifiable. Certainly there are concerns on the growth side. There are concerns on how Infosys kind of blue chip company can degrow or grow at a level which is lower than the industry average. Those issues are there, those concerns are there. But all I'm saying is that today's reaction of market from a rupee investor point of view gives you an opportunity to buy rather than sell.
Nilesh, Infosys has a roughly 7 or 8% weightage on the Sensex and about the same on the Nifty. If you have to construct a portfolio, how much weightage would you allocate to Infosys?
We were underweight technology stocks before the result, and my feeling is that based on the price correction which is being provided, will probably be neutral weight on IT sector. This is one sector which is right now mired in the worries of global slowdown. There are issues related to General Motors kind of company looking to insource IT and other businesses rather than outsource. So those are the trends which one will have to fight. But at the same time, when you get IT sector or bulk of the IT sector, which is cash rich, which is generating cash, where the dividend policy is reasonably decent in terms of payouts, where corporate governance are fairly good, it's available at a below discount to the broad market. It's almost available at natural resources kind of valuation. The valuation gives you the comfort, but it's not going to something which is going to give you instant return. There's no 2-minute formula over here. You'll have to bear the pain for some time, accumulate slowly when the market is correcting, because from a rupee investor point of view, technology sector, courtesy the currency depreciation, gives a great opportunity. Yes, to some extent pricing power has been eroded on the global concern, but currency depreciation has kind of negated that disadvantage.
Nilesh, what about the overall market? We've been range bound for, many days now. Do you think the next trigger is only going to come in by way of policy action and then perhaps the market is going to take a directional call?
You are absolutely right. From a valuation point of view, we are trading at about 13.5, 14 times 1 year forward earning. In today's environment and looking at the global peer group, it's unlikely that now the valuation upside is there in the market. It's not that we are going to trade at 16 or 18 times 1 year forward in a hurry. So valuation upside is not there in the market. The market upside has to now come from the earnings. And on earning, there are lots of concerns today. Concern of inflation, concern of monsoon not being there, concerns of investments not being there. So there are lots of concerns on the earnings, and which is why probably markets are likely to be range bound rather than giving a particular direction. The sentiment could still be turned positive through policy action, and here we have very low hanging fruits to be caught. I would just like to quote one email which I received today morning. Unfortunately, I don't remember the name of the person who has written it, but I think a foreigner who has described the situation aptly describes what's happening in the world. So he talks about growth, and he said it's negative, negative, and negative. He talks about corruption, and he says it's prevalent in the banking sector, it's prevalent in the industry. He talks about incompetence and leadership, and he says, where is the leadership here? He talks about indebtedness, and he says it's everywhere. And then finally he talks about weather, and he says it's completely unpredictable. Fortunately, he's talking about Europe rather than India. Now, if a European looking at Europe believes that these are the issues, most of us will actually, if we read that email, will think that he's talking about India. And which is why we are seeing about $1 billion coming into Indian equity market over the last 1 month. Year to date, almost $10 billion has come from foreigners since January beginning. And that's a reasonable amount of inflow when we compare to the outflows in emerging market funds. So clearly we have low-hanging fruits to be caught. If we can convert the policy action which is being right now under progress into concrete action, into concrete steps, I think the sentiment will turn bullish, and then eventually earnings can flow in to sustain the market on the upper side. So your point is absolutely valid. We need now policy actions which can support the sentiments, and then earnings can flow in.
Nilesh, if I look at the current environment, the fundamental turf is not all that strong, but like you mentioned, foreign institutional investors have been net buyers. So what is driving this optimism? Valuations or hope that things will turn around?
See, one, because of currency depreciation, we are now available, if I exclude the last week's rally, at under $1 trillion market cap. I mean, you don't get country like India at $1 trillion market cap. So clearly that's making us attractive to foreigners because we have been depressed in terms of value courtesy currency depreciation. We are about 30% cheaper vis-a-vis when rupee was at 44, even though our earnings have gone up. That's bringing foreigners' money into the country. The second thing is that, while we kind of devalue ourselves based on our growth, based on our fiscal deficit, but let's look at it from a foreigner's angle point of view. Europe and India is no different. We have 20 plus languages and cultural diversity, but we are a nation holding together. Europe also has similar kind of diversity and language, but as a union, they are not coming together to fight the recession or to fight the problems. They have deficit problem, they have leadership problem, they have governance issue, like us. And when a foreigner is looking at those pieces and then looking at India, he is seeing that, okay, here is a country which has low-hanging fruits, and if they bring their act together, for which probably there are brighter chances now, I have a better bet of investment in India. So clearly it is the valuation which is bringing foreigners' money into the country, and definitely we have to sustain their encouragement or their interest in our country by converting policies into real actions on the ground. The second thing which probably is happening is that, there is a white school of economics and there is a black school of economics. So the person who preaches us black school of economics says that, look, India can't have fiscal deficit. You are running at 5.1% fiscal deficit. That's too bad. But the same person, when he goes to Europe, he's talking to Spain, Portugal, Italy, Greece, saying that, oh, you only have 10% fiscal deficit. You must spend money. You must not follow austerity measures. You should spend money, otherwise you will fall down. So clearly, while they're talking about black school of economics versus white school of economics, the investors are realizing that at the end of the day, there is one school of economics. So all these concerns which we have and which we have been kind of inflating gets much, much lower compared to the peer group. At the end of the day, we need FII money to spur the investment, or we need to convert our investments which is going into gold into the financial instrument so that it can spur the investment. And if investment comes, growth automatically comes, and if growth comes, everything else kind of starts reducing. So our only focus should be on increasing the investments which can spur the growth.
Nilesh, what happens if after the presidential elections there's nothing much which is done by way of policy reforms? Can we expect the market to correct, and a correction quite significant at that?
Undoubtedly, today markets have gone up because there is hope, because there is belief that India will take decisive actions. Actions on cutting deficits, actions on spurring growth, actions on increasing investments, and action on controlling inflation through supply side management, and so on and so forth. Today, even today, India is trading at a premium to the rest of the emerging market group compared to Brazil, compared to Russia, compared to China. Notwithstanding our concerns, we are still trading at a premium to them. That premium is only coming because investors believe that India will be a long-term better story. Now, in the last 2-3 months, money has come into the country on the basis of belief, hope that India will take decisive action. If we don't take those actions over the next 2-3 months, certainly there will be disappointment, and then there could be corrections in the market.
Nilesh, you track the entire telecom space with a magnifying glass, and I know you have a positive bias there. Today the ECOM and the verdict of how 2G spectrum in the country will be priced will be out. Do you think some economic sense will prevail there, and we are not, do you think we will hear some illogical decisions?
I think telecom sector today represents what was the best in the country and at the same time what is the worst in the country. We had times when we were waiting, at 10 o'clock in the night outside a PCO to make a call because rates were so expensive. Today, mobile is there virtually in the hands of every Indian. Now, this represents the best of the India in telecom sector, the kind of coverage, the kind of cost, the kind of services. And at the same time, if we see last 2 years muddle in terms of policy responses, in terms of policy framework, it has created a lot of uncertainty. Telecom is helping India grow much faster. It's connecting people. It's helping farmers get the better prices through information. I think it's time that government comes out with a clear policy on telecom sector that will help further investment in telecom side. If we see internet millionaires or billionaires in the world, clearly it's dominated by US and Chinese players. We are not seeing Indian internet billionaires in that space. India is the third largest internet market in the world, and unless until we provide them with telecom connectivity, which can remit not only voice but also data, this dream of internet will not occur. It will remain, limited. So it's time that we clean up this telecom sector, create transparent policies, guidelines, and then let the entrepreneurs, drive what they have driven in last 15 years.